Hello friends, in the series on the income tax cases, today we will discuss the case of Feelings, that is a partnership firm, versus Principal Commissioner of Income Tax. This case has been reported in 107 ITR Tribunal at page number 405 and the matter has been decided by Panaji ITAT. The date of the judgment is 1st September 2023. In this case, a very limited issue was before the Honorable Panaji ITAT. The issue was that in the present case, the assessee has some surplus funds. The assessee is indeed a partnership firm, and the partnership firm invested its surplus funds on which the assessee received interest. This interest was credited into the profit and loss account, and while making its computation of income, the assessee included this interest into its income from other sources. But for calculating the book profits under section 40 clause B clause 5, that is for determining the allowability of the remuneration paid to the partners, because as all we know that we have to calculate first of all the book profits and then the limits of the remuneration to the partners is calculated. But the department was of the view, but in this case one fact was there, that when passing the assessment order, the assessing officer was with the concurrence with the assessee that this interest should be included into the book profits. But at the time of the revision under section 263, the Commissioner of Income Tax initiated revision proceedings under section 263 by holding that this interest should not be included, or in other words, this interest should be deducted from the profits for calculating the book profits under section 40 clause B clause 5 for determining the allowability of the remuneration paid to the partners. So the assessee was before the ITAT. The ITAT said that in this case, when the book profits are calculated, the profit as per the profit and loss account is taken. There is nothing mentioned that while calculating the profits as per the profit and loss account, interest should be deducted. But the department was relying on the circular of the department, which was issued on 19th June 2019, the circular number 12, which specifically says that interest income, rental income, capital gain income should be deducted from the book profits when it is included therein to calculate the permissible limits of the profits. That is the book profit for calculating the allowability of the remuneration paid to the partners. For this, the ITAT was of the view that first of all, this circular was not related to the assessment year for which the matter is related. The circular came in 2019. The assessment order was passed before 2019 and even the revision was done before 2019. So this circular cannot be applied to the assessee. Secondly, the ITAT was of the opinion that the circulars cannot override the judicial precedents which have been given. And one more thing is that the circulars are binding on the department but not binding on the assessee. When the judicial precedents are there in favor of the assessee and some circular is there, the ITAT was of the view that the judicial precedents should prevail over the circulars. So the crux of the theory is that the circulars cannot take the position of the judicial precedents. Friends, although this case is on a very limited issue, but this is very useful when calculating the permissible limits of the remuneration which is paid to the partners and which is based on the book profits calculated under section 40 clause B clause 5. At the end of this video, once again I am repeating the name of the case. The name of the case is Feelings, that is a partnership firm in this case versus Principal Commissioner of Income Tax, and this case has been reported in 107 ITR Tribunal, page number 405. The matter has been decided by Panaji ITAT and the date of the judgment is 1st September 2023. Thank you, friends.